Hey guys, welcome back and Happy New Year! It's been about 2 weeks since I've made a video, and I'm not gonna lie, it was actually pretty hard for me not to make videos once we saw that drop because I absolutely love volatility, and we had some really beautiful moves like that bounce in the election gap, the 30-minute 200 moving average resistance, and right here at 602, that was previous support that turned into resistance on that bounce. There was a lot of really great technical things that happened, but honestly, I needed the break from making videos. So I'm going to bring these things up as they become relevant within the next day's trading range. And really, that's why you guys are here, right? To see what the next day's trading range is going to bring. So I don't plan on taking 2 weeks off again, at least for a little while. So let's just head right into the first day of 2025's trading range. Let's go check out tomorrow's levels. All right, guys, so first trading day of 2025, and the implied move in SPY is between 581 and 592, and that is from options. The 30-day average volatility is a little bit wider, but it still rounds up to the same thing, so 581 to 592. And on Friday's contract, 579 to 593. And to the upside, the first level to look for is going to be this 35 EMA. So the 35 EMA, once we broke down right here, 35 EMA came underneath the 30-minute 200 moving average. This is the moment we became bearish and we dropped, and that 35 EMA was resistance here. And then we did see a pop up. This was for Christmas. This was our Christmas rally to the 30-minute 200 moving average, but then we dropped back underneath the 35 EMA. And you could see down here the signal line turned red, and that 35 EMA stayed as resistance even as we went underneath the 50-day moving average. So right now, futures are up 0.51%. If we measure that out, that should take us right to the 35 EMA. So 0.51 is literally right at the 35 EMA. That is going to be the first level to look for. And then if we do get above that level, then 592 is the top of the implied move, and 593 on Friday's contract to close the week. Right above that, we do have the 50-day moving average. And above that, we have the 30-minute 200 moving average, which was resistance right here on December 26th. So really, the only level to the upside within our implied moves for the next 2 days is the 35 EMA. And then to the downside, we do have this election gap, and I do want to mention we did have it closed out just a little bit. So if you look at where the bottom right here is, that lines right up with the bottom of the implied move, which is 581. So just imagine this part of the gap is gone. I'll fix that later. And then underneath that, we do have the two overlapping gaps. So we have the election gap right here, and then just before that, a few days before the election, we did have a gap down. So where those two gaps overlap, those always fill. Regular gaps sometimes will leave behind and leave open, but when they overlap, they always fill. And that would be an excellent target if you're bearish, you're looking to the downside. Even if we do pop up tomorrow, we might see resistance at the 50-day moving average, and then this gap right here with that 4-hour 200 moving average underneath it be a really great target. So overlapping gaps always fill. It might not be tomorrow, it might not be Friday, but eventually it will fill. All right, and then taking it over to SPX, the implied move over here for tomorrow is between 58.25 and 59.35, and that is from options. 30-day average volatility is just a little bit wider, but also rounds out to those same numbers, 58.25 to 59.35. And then on Friday's contract, we do have an implied move that is wider than the 30-day average volatility, 58.10 to 59.50. And to the upside, that same 35 EMA. And same thing over here. When we did drop that 35 EMA underneath the 30-minute 200 moving average, right at that moment, that is where we went bearish. And right here, even when we saw that rally to the 30-minute 200 moving average, 35 EMA was underneath it, and that still made it bearish. So we gapped down back underneath it, and that 35 EMA was resistance, even after we gapped underneath the 50-day moving average. So 35 EMA, important level. It's the only moving average in our trading range for the next 2 days. So it will definitely be relevant, and measured out right now, we have 0.53%, and that takes us to just a little bit above that 35 EMA. So that is a level we're going to see tomorrow. And if we do get above it, then 59.35 is the top of the implied move. 59.50 is the top of the implied move on Friday's contract. 50-day moving average is right at the top of the trading range. The 50-day moving average is a really significant level, and it's a big statement that we closed underneath it to close out 2024. And then to the downside, we again have the election gap and also that down gap that we had just before it. These gaps always fill, and we had that down gap here, the up gap here, and sometimes we do fill just where they overlap. So 57.83 would be the bottom of the gap, and then you could see that 4-hour 200 moving average coming right up here, and you better believe that that is a level that I am watching. So 50-day moving average above us, 4-hour 200 moving average below us. And on TradingView in the next few days, I will do some bigger time frame analysis, since we do have bigger time frame moving averages in our trading ranges. So that is SPX and QQQ. The implied move for tomorrow is between 505 and 518, and that is from options. 30-day average volatility is almost exactly the same, just a tiny bit wider, but it still rounds out to those same numbers. So 505 to 518, that is a pretty big trading range. And then the Friday's contract is wider than the 30-day average volatility. So almost an $8 move in each direction for Friday's contract. And to the upside, we have that 35 EMA. 35 EMA right here was resistance all last week. Actually, this was Monday, Tuesday, so all this week. And you could see right here when that 35 EMA came underneath the 30-minute 200 moving average, we did see that pop up. And look at that 35 EMA rejected right at the 30-minute 200 moving average, and then that became our resistance. So this right here really solidified that bearish move underneath the 30-minute 200 moving average. So that level is right here, and you could see right here on Friday resistance, then on Monday resistance here. So definitely a level to have on your chart. If we get above that, 518 is the top of the implied move. 519 on Friday's contract, and that 1-hour 200 moving average is right there. The momentum here is still up. Underneath us, we have the 50-day moving average. On Tuesday, we did drop down to the 50-day moving average, popped up, but at the very end of the day, could barely hold that level. I traded QQQ on Tuesday, and this move right here really messed with me. I still closed green, but I needed it just a little higher. So if we break the 50-day moving average, bottom of the implied move for tomorrow is 505, and then 503 on Friday's contract. Stupid Willie is still pointing us lower. We did see a rejection at the signal line right here to close out the year. But that 50-day moving average is a really big level, so we might see a little bit of sideways here before we pick a direction. 4-hour 200 moving average is underneath all of that, still a little bit of a ways away. We do have overlapping gaps underneath that, so just be aware they always fill. It doesn't have to be tomorrow, this week, or next week, or even this month, but we will fill this gap. All right, and then IWM. The implied move for IWM here for tomorrow is between 218 and 224, and that is from options. The 30-day average volatility is quite a bit wider. It is 216 to 226, and on Friday's contract, 217 to 225. And we did see a complete closeout of the election gap right here. And to the upside, we do have the 35 EMA. And right now, small cap futures are up about 0.63%. So that takes us to the other side of that 35 EMA. Now, if we zoom out just a little bit, you can see that the 35 EMA was a very, very steady resistance since we made those all-time highs. We made these new all-time highs after 3 years. And once we hit that, we made new all-time highs and then we pulled back. And this 35 EMA has been very difficult to get above. So right before we dropped, we really tried to get above that 35 EMA and then got smacked away from it. And we did have a little bit of blue candles, but for the most part, that 35 EMA was a strong resistance. So turning that into a support is necessary for a swing up. Now, if we do get above that level and see it as support, 224 is the top of the implied move. 225 on Friday's contract, and that 30-minute 200 moving average is up there at the top of the trading range. And we do have at 225, we have resistance right here. So if we do open the week near this level, I would look to sell bear call spreads here. We've got a resistance plus the 30-minute 200 moving average here. And then to the downside, we do have support right here around 218, a little bit underneath that. 218 is also the bottom of the implied move. 217 on Friday's contract, and underneath that we do have a support gap. So that goes back to, that's funny, that's the gap above that 211 long support resistance. That makes me want to take it to the 5-year chart here. So 211 is this solid green line. If I zoom it out to the 5-year chart, you could see right here it was a previous support. This was back in 2021, and then it became resistance. Then we did have that up gap right here. It's not showing on this time frame, but that up gap is right here, and that support and up gap is right here. So 211, if you're bullish small caps here and you're looking for a strike to maybe sell deep in money calls, 211, I would even take it down to 210, might be a good option. And so that is just underneath our trading range. And then, so let me show that really quickly. That is that line, and then we have that up gap, so this support gap right here. All right, and then lastly we have DIA, and we only have a Friday contract on DIA, and the implied move on that contract as of today is between 420 and 431, and you could see that the center of that is pretty much right at a support level. And to the upside, we do have that 35 EMA. Again, futures are up right now, so it's possible that we open above that 35 EMA. And if we do, then possibly 431 as the top of the implied move for Friday. Now, my DIA chart is a little bit sloppy, and we do have a down gap right here and also a down gap right here. So if we get above the 35 EMA, there is a sell level right here, and the top of the implied move is at 431. And then the 30-minute 200 moving average is coming down. The momentum here is down. Rule of thumb is you don't want to go long at a downward facing moving average. wait for it to turn, wait for that momentum to go up. And DIA had a really solid sell-off all of December. So after making new all-time highs here at the beginning of the month, that 35 EMA was a really strong resistance. It was a slow, steady, calculated sell-off. And then we saw that big drop. So DIA also filled the election gap right here and this gap right here. So the overlapping gap was filled in DIA. And that's all I've got for today going into the first trading day of the new year. And now that I had 2 weeks off, I intend on being back every night, but I just won't let myself get quite as exhausted as I did. Have fun tomorrow, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow night.